I think it's 98 million, but let's just say 100 million shares traded as the stock went down to its low of about $33. This is capitulation volume, if there ever is such a thing, and there is such a thing. Whoever was selling all these shares was getting out at the low, and I think that low is in, though I never knew anything for 100%.
Brace yourself for a significant upheaval in the silver market, as indicated by Rafi Farber. Silver appears on the brink of liberating itself from a triangular formation that has persisted since the 1933's 25-cent days. In the case of gold, Newmont Mining, NM, has recently witnessed unprecedented trading volumes, surpassing records dating back to the Nixon era when the gold window was closed. Join us as we delve into the compelling themes that are shaping the future of precious metals. Stay tuned until the end as we unravel the intricacies of these developments.
And we've got some exciting stuff to talk about. The gold and silver markets are waking up from their dusty drawers, or whatever you call it when it's boring and depressing, to something more exciting. There is some truly crazy stuff happening, specifically with Newmont Mining, the biggest gold miner in the world, and I believe it signals a capitulation in the gold and silver mining stocks sector. And these numbers are really off the wall. They will probably shock you, as they shocked me. I was 3 weeks late in finding them, but better late than later. As silver is breaking out of its stupor, holdings in the SLV ETF have hit a new post-silver squeeze low, meaning that the retail traders are not participating in this rally. This is the big boys. These are the big position holders, the institutional money that's moving in. Retail has yet to move in, and when they do, silver will move even higher probably. One chart to show from the great John Rubino of gold price action versus interest rates when the cutting cycle begins. That is when gold explodes, and by extension silver as well. And why we are almost there should begin around March, maybe even earlier, January, February, March, something like that. And there have been some arguments made about the reverse repos, why it doesn't matter if they reach zero. And I will reiterate another reason why it definitely does matter when they reach zero, having to do with treasury bills. And an article written by the New York Fed, or published by the New York Fed itself, we're going to talk about a triangle formation in silver that goes back all the way to 1933. Fortuna Silver Mine, symbol FSM. Fortuna is a no-brainer for silver miners if you are into buying silver miners in preparation for a silver run to the moon, wherever the moon is. This is an all-time chart of Fortuna versus the SIL Silver Miners ETF. And it gives a very compelling reason why Fortuna is one of the leading silver miners. At least from this chart, it is very obvious. Going back to 2011 here on Y charts, we see here that Fortuna has been outperforming the SIL Global Silver X Silver Miners ETF 59% since 2011 versus down 37% for SIL. So Fortuna has gained close to 60%, while the SIL ETF, averaging out all big silver miners, has lost about 38%. So it's really no contest. Fortuna continues to be, in my view, one of the better gold and silver miners out there. I do own it, and I am biased. Do your own due diligence, etc., etc. Now, here is the really crazy number. This really shocked me. I can't believe I missed this. Well, I can believe it. I don't look at every single number every day. But this was a pretty big thing to miss. This happened on November 7th. The top chart is the price action of Newmont, the biggest gold miner in the world. We see here we have a 3-year low here. I think it was $33 or something like that. We'll go into the table in the next slide exactly. But you see here a humongous, absolutely enormous spike to about 100 million shares of volume. This is daily volume. These are daily volume bars. This is the latest, I think, for November, what are we, 29th now? November 30th. So this bar up here goes up to about 100 million. I think it's 98 million, but let's just say 100 million shares traded as the stock went down to its low of about $33. This is capitulation volume, if there ever is such a thing, and there is such a thing. Whoever was selling all these shares was getting out at the low, and I think that low is in, though I never knew anything for 100%. But this looks pretty big. Now, it's not just November 7th. not just November 7th where this is happening. Something big is happening in Newmont. This is an all-time chart of the top volume days, the days of the most trading volume in Newmont going back to its founding in the 1970s. I think 1971 or 72 or 74, something like that. But you see, these are the top 23 slots, maybe 24. I didn't count them exactly, 23 or 24. And all the bold ones happened within the last month. The earliest of the bold, October 26th, 2013. I apologize for the European style of date writing here, but that's just the standard in my Excel. Maybe it makes more sense, but let's not argue that point. So we have all the bold here. 4 of the 5 bold are in November 2023, this month. So of the top 23 volume days ever in Newmont trading shares, 4 of them are this month in November 2023. Something huge is going on with this stock. And as you see here, the top trading day was November 7th, 2023 at 98,182,700 shares. Now, as this is going on, as silver is breaking out, along with gold and silver mining shares, SLV holdings have fallen to a new post-silver squeeze low. And that is at, what is this, 13,562.62 tons for November 29th, 2023. And it's just below the low here in September of 2023. So that means there's really no interest in SLV in retail traders who use silver to gain dollars rather than buy silver themselves. This is showing that retail is not interested, so they have a lot to push silver up. There's a lot of room for silver to go up when retail does join the market, and we know by low premiums these days that retail is just not interested in silver right now, which gives a lot of room for the rally that is already underway. He shows this chart, which shows gold's price action when rate cutting cycles begin. The biggest gold rallies happen when the rate hiking cycle begins, and then gold tends to fall as interest rates stay at or near zero. I don't think that is going to happen this time. I think as rates stay near zero this time, gold is just going to keep going up and up and up, along with silver, because we'll be in an endgame scenario as the monetary system blows apart. But you can see here that the big gold rally from 2006 to 2012 began as interest rates topped out in 2006 and really accelerated as interest rates were pushed towards zero. And we see here again, we are when interest rates topped out in 2018 or early 2019 at 2%, and they were pushed down again towards zero. We had another gold rally to new all-time highs. And finally, we are at the point where interest rates have maxed out. It looks at 5.25 or 5.3%, whatever that is. And when they start cutting, gold is going to go, it's going to go close to vertical, as we'll be in a monetary crisis, and silver will go even closer to vertical. I don't know how high it will get, but it's going to be pretty scary for dollar holders. This is since 2002. And though this is not a perfect chart, and technicals are never 100% perfect, it is kind of voodoo-ish. We have a triangle that has been established since the lows in silver at the end of 2001. I think this is like $2.50 or maybe $3, something like that. And this triangle has been loosely moving up since then. And we have a little icicle here when it broke through the lows in March 2020, but it is reestablished here with a tangency in September 2022. And we see the clear downtrend in the triangle since the tops at 50 in May 2011, and we are narrowing down in a very similar looking triangle, but it goes even further than that. This triangle you could draw all the way back, and it's not as clean, it's not as perfect, but it is still there, all the way back to 1933 when silver was just 25 cents an ounce. And this is a logarithmic chart, but it is still there basically from 1933 at 25 cents all the way up to now. And here is the low in 2001 at $2 and maybe 75 cents, whatever that is. And we see here the downtrend established and the 2011 highs at 50 and moving down to where we are now. So this is a massive triangle that is arguably 90 years in the making. And when it breaks out, it's going to break out spectacularly. And that is going to be when the rate cutting cycle begins at the next monetary crisis, when the reverse repos run out. This is my theory, and I could be wrong about it all. But in case I'm right, you might want to have some silver now.
We appreciate your presence as we delve into the unfolding stories of silver and gold. Rafi Farber's perspectives provide a distinctive lens through which we can understand the changing dynamics of precious metals. Stay ahead in the market by subscribing for additional expert analyses, and be sure to stay tuned for the most recent updates on commodities. Thank you once again for joining us.